This month, we have a very interesting topic planned out, fintech market expansion, and we've brought two OGs in the industry, actually. First, we have Gabriel. Gabriel is an assistant vice president expansion for West Africa at Flutterwave. Can we give it up for Gabriel, guys? And next, we also have Joy David. Joy David is a product manager who focuses on international expansion. And I'm just going to listen to them, share their thoughts. The goal for this masterclass is to first of all, make sure that the African context is covered when it comes to market expansion. And we all know that from country to country, expansion plays differently. And also for people that work in teams where you're looking to expand internationally, you've been playing in the Africa space for a bit and you're like, okay, it's time to go global. This masterclass is also intended to drive that as well. So our first speaker, I'm just going to be introducing him short now, and he will come up right after that. Gabriel, like I said, is a very prominent voice in the industry. You may not hear about him all the time, but he's making the moves where it matters, and that's really, really great and commendable. So Gabriel is the assistant vice president for expansion at Flutterwave, and he will be sharing with us, expanding and expansion in the Africa context, what it takes to expand from country to country in Africa, and all of the secret tips and bits that will be helpful for us. So let's give it up for Gabriel, and it will be coming up now. Thanks. Let's show him some warmth. Thank you, guys. Thank you. So Gabriel, over to you.
Hi everyone, good afternoon. Do I turn on my video?
Yeah, sure, you can do that.
Okay, 1 second. Good afternoon, good morning, good afternoon, and good evening, everyone, depending on which part of the world you're joining from. Thanks, Elizabeth and the team, for this opportunity. And let me just go straight in. I'll be sharing my screen. Let me know when it is up. Good morning, good afternoon, everyone. Once again, my name is Gabriel, and I lead partnership across West Africa at Flutterwave. It's my pleasure to be here at Builders in Fintech, and I'll be discussing scaling a fintech business across the African continent. We'll just look through the African opportunity and why it makes sense to expand your solution across the continent, regardless of where you're established and where you're based, and how to initiate and design your market expansion strategy, localizing your product, because every market in Africa is different, 54 countries with 54 different unique cases. And then what are the growth opportunities in the next year for any fintech to pursue and explore? Okay, right, going into it. What are some of the African fintech opportunities on the continent of Africa? The first thing is that it's a continent of 54 countries, 1.4 billion population, and this is a major asset, for us in Africa. 1.4 billion people with a very, very low financial literacy level means that there is a lot of work to do, and those who are able to plug into that are the ones that are actually going to be able to get the cake eaten. Average transaction volume total per year on the continent is estimated to be about between 1 trillion to 1.2 trillion. Unfortunately, less than 10% of that total value is done through digital channels. That's because cash is still king in Africa, and so there's still a lot of room for digitizing payments in Africa, and that is one of the major opportunities. Economic potential for any fintech startup as well. As at today, total revenues, is somewhere between 100 and 120 billion annually, estimated to be somewhere around 150, approaching 200 within the next 5 to 10 years. I mean, the growth rate annually is about 25%. So imagine that because of the space where you operate in, you are likely by default to be able to grow at that kind of rate, 25 to 30%. So worst case scenario, even if you're able to do 10% year on year growth, that's significantly, that's significant growth. And without too much work, without too much hustle, because the total addressable market is over 500 billion, more than enough to go around. And then Africa is the leading market for mobile money. There's no other country or continent who does mobile money like Africa does. And what that means is that that is an expertise and skill and knowledge that we can export to other parts of the world, making room for another revenue challenge. Now, so I'll be talking about expanding to across Africa, and my talk will be divided into three major parts. The first part is the market expansion strategy, that is designing your go-to-market and your expansion strategy across the continent. What is the first thing you should do? You should select your market strategically. And what does that look like? Begin your operations, set up your business in one of the tier one markets, and through that you're able to establish volume and proof of concept. And so what are the tier one markets? You're looking at Nigeria, you're looking at Kenya, South Africa, Egypt, and these markets are tier one markets because of the population size. So you have a decent potential market audience. Then income levels is significantly, well, maybe not significantly, but substantially higher, within these markets than in any other market on the continent, which means that your average potential customer has sufficient disposable income to subscribe to your product. And so you need that to be able to establish that, okay, this solution is something that the market will be interested in paying for. So that's the first thing. Identify any of the tier one market that you would want to establish, because you need a very, very solid foundation for your expansion. Because for a while, when you begin to expand, where you are founded will really be the anchor for all of the other markets wherein you operate. Then if you have achieved that, the next market you want to look at are the tier two markets. So like Ghana, Uganda, Tanzania, Morocco. These are markets that are not so big, but they are not, you know, particularly difficult to set up operations and then also to scale from there. And then once you've taken care of these two things, the next thing you want to look at is you want to assess the market, in relation to your own service offering. And you're looking at regulatory maturity, and regulatory maturity means how open is the government, is regulation to innovation, because the first step to operating in another region or country, as the case may be, is regulatory permission. And so depending on how open the government of that country is would really determine if it is going to be worth your energy. You don't want to be chasing licensing for 5-7 years. I mean, how old is your business for you to now spend so much, financially and time wise, chasing regulation? You also want to look at things like internet penetration, disposable income, how many people have access to financial services and things like that. And then, of course, you then phase out your expansion when you have taken care of all of this and you want to actually start going out and launching out. So the smart thing to do is go deep in the markets where you operate first, maybe an average of 18 to 24 months. You've really established in your tier one market that you've chosen. And then afterwards, you can look at the tier two market, spend maybe like another, 18 months, get going deep and really establishing strong foothold in that market, after which you can then continue to expand. The next critical piece, which I alluded to in the previous slide, is regulatory coverage. Again, regulatory coverage licensing gives you permission to operate within that country. And so you want to understand what the licensing landscape of this country, these countries look like. You also want to begin to build relationships with the regulator, central banks in most cases, because these things take a while. It really, really takes a while. So the smart thing to do usually is start to build a relationship with those regulators before you would ever need to start to engage them, for licensing. And this is necessary because they're already familiar with you, they're familiar with your business, you're not a stranger to them. And a lot of the things that would have, I mean, they already understand your business. And so they know who you are by the time you are approaching them. And so maybe just a few things like finishing touches that, you'll be needing to clarify to regulators when you're trying to now apply for the license. Then the other thing is compliance infrastructure. Compliance requirements differ from country to country. And so you also want to understand what that infrastructure, what the requirements in that country looks like. Do they have infrastructure in place that supports it? And are those compliance requirements something that your own business, as it is, as you've been running for the past maybe 36 months, is this something that your business can align with and easily accommodate? So these are things that you want to look at. Then the second critical piece is your own technology infrastructure. Like, how robust are your systems and what kind of systems do you have? So one of the things that you want to do is build a product or service that is easily integrated into um, all sorts of payment infrastructures. And what do I mean? In Nigeria, for example, it's mostly transfers and maybe card payments. We don't do mobile money. I think Nigeria is probably one of the less than 5 countries that don't do mobile money in all of the continent. So if you design your product in such a way that it can only work seamlessly with bank transfers or with card payments, and then you want to go to a market like um, a Ghana, a Kenya, where it's pretty much mobile money that you do, then you're going to have a problem. So you want to design your product such that it can speak to every payment real type. So whether it is mobile money, whether it is wallets, whether it is QR payment, whether it is card payment, whether it is bank transfers, you want to design it in such a way that it can easily and seamlessly interact, with those payment options. You also want to, as a second point, also want to factor in offline capabilities for your solution, meaning that without internet access, your product can still work. Maybe not all the full features will be available, but at least some features or the basic features that meet the basic needs of the customers can be activated without internet access. And this is very, very critical because of the very, very low internet penetration, across the continent. So you're either dealing with customers that don't have access to internet or connectivity is terribly poor. So you want to design it such that, if network is not available, it can still run, right? And then of course, you also want to build in fraud and system controls within your infrastructure. Then another third piece to it is partnerships with the local team. So again, the nuances are different from country to country. And this is one of the things that you will need to do next after you secure your license. Licensing, gives you the right of presence, but local partnerships gives you the right of passage, like I like to say. Um, you don't want to make the mistakes that you don't want to repeat the mistakes that local players have made. You want to accelerate your learning curve, and so partner with local switches, telecom operators, the banks, the MNOs, and that helps you to quickly integrate and grow within that market. This is also one of the things that you can do during your application license waiting period. So maybe you expected that within 8 months, 1 year, you would have secured the license, but you're still at it for the next 3 years. So rather than not do anything at all, you could leverage existing players and partner with them, white label your solution to such players, and then they can sell it to the market. And then you also use that to do your market research, understand the market within that period, so that when you now get your license and you want to run on your own, you already understand pretty well the market. And then of course your go-to-market distribution strategy when you eventually have a presence there. So you want to look at what marketing in that market looks like. Is it still predominantly radio or TV, or like a Nigerian market where there are digital channels that you can use to pursue marketing. In Nigeria, if anyone is trying to do marketing on newspaper, I don't know how effective that is going to be in this day and age, but there are some communities on the continent, it is still a newspaper thing. So you also want to pay attention to your unit economics. It doesn't make sense when you're doing well in your tier one and tier two markets, you're not expanding across, and the costs that you are incurring in those markets is now wiping out all the work that you have done in your foundation market. So you want to calibrate your go to market in a way that the unit economics makes a lot of sense, and supports the foundation areas where you are operating from. Then of course the second part, which is product localization. And by product localization, I mean that you are customizing the product or your service for the local market. So I gave the example of a Kenya that it's predominantly a mobile money market. So hopefully at the time you are launching in, you've designed your API in such a way that it can partner or integrate seamlessly with any payment rail. So because mobile money is not a thing in Nigeria, you will then need to activate those kind of capabilities, right, for a mobile money market. So you want to integrate with the mobile wallets that are on ground so that you can make payouts, settlements into those wallets, and also, payment as well, right, via your channel, but from their wallet as against the banks. You also want to look at USSD capability on feature phones, right? Can people still access use your product using a USSD feature? Again, besides internet penetration, you're also looking at mobile phones penetration. So in markets where smartphone is not really a thing, but feature phone is what they still use. Nokia 3310 is what they still use. You don't want to be completely locked out of that segment of the market. So you may want to look at things like that. So in a nutshell, localizing your product requires you to pay attention to what is going on ground and tweak your product, to suit the local needs. Pricing is another important piece. You can't charge above the market. What do I mean? If in Nigeria transfers cost, let's say equivalent in USD, let's say 50 cents, and then that's what everybody is charging because it is a perfect competition market. And then you go to a Ghana where the fee is around 15 or 20 cents. You can't charge 50 cents in that market because that's what you're doing in Nigeria, right? You're not going to get anything. You also don't want to price yourself out of the market. What do I mean? So if in that market, average pricing is between $1 and $2, you won't say because you're charging 50 cents in Nigeria, you will leave money on the table. So you look at those kind of things, when designing your pricing strategy. Also, KYC, identity, and credit scoring. This is a very, very critical piece because for regulators, identity, KYC, compliance is always a big deal. So you want to understand the KYC framework of that local market and build that into your system because it's going to be a very, very critical piece. In fact, it's one of the things that you will need to clarify and prove to the regulator that you have in place before you're able to get your license. The other thing also, when you start to look at the unbanked, right? And maybe you're in the space of digital lending. We are dealing with people that don't have bank accounts, that don't have any financial history, banking financial history, so to speak, and then you want to give loans to such people. How do you do it? You can't approach the conventional way. So you most likely be leveraging alternative data. So maybe community data. What do people say about this person? What do people say about this business? What is their transaction history like? Are they credible people? From what the market is saying. So you want to pay attention to those kind of things when launching into those markets, and then build trust and cultural adaptation. It is very, very important that when you are launching into a new area. Sorry, please, can you confirm you can still hear me? So I'm sure I'm not talking to myself.
Yes, we can.
Yeah. Excellent, excellent. So you are going into a new environment. The culture is different. You look at a place like maybe a Liberia or a Benin Republic, where those guys, they don't have any worries, they don't have any cares. It is Nigeria, or maybe particularly Lagos, where we have hustle culture. Everything must be done instant. Everything must be done immediate. Everything is top urgent. In those kind of locality, the culture is completely different. And so you don't want to impose your own culture on them, because you need them to consume your product. And so you want to have respect and regards for their culture. And so one of the easiest way to do that is to build a local team, and the local team should now include natives, people from that country holding strategic positions, so they can guide, the company culture in a way that it aligns with the local culture. And then, of course, finally, part three, what are some of the growth opportunities that we expect to see in the next 10 years on the continent? The first critical one is embedded finance, right? And this is making financial services, particularly credit, available on digital channels. So, for example, you're looking at e-commerce, embedding finance, buy now, pay later on e-commerce channels. So we are seeing that happen with Jumia, with Konga, and that is actually very, very helpful. So again, you are dealing with people who may not have a credit history, and you want to help them build that credit history. So your solution, let's say it's a POS solution, for example, but you are able to offer whatever kind of service, right, that they can buy now and pay later for. And so after a period of say 12 months, 14, 16, 18 months, your customers already have a credit history. They don't have a credit history through the conventional way, but they have built credit history, and there is record to show for it. And so that is data that you're also generating and feeding into the market. Another bit where embedded finance can work is also on social commerce on WhatsApp, right? Marketplaces, we are beginning to see marketplaces on WhatsApp channels, WhatsApp groups, and things like that. And so you may also want to provide whatever kind of financial services, attach it to your digital solution that you are selling, on WhatsApp. And then another key opportunity is SME banking and lending. I already stylishly talked about lending. In Africa, right, the total lending gap for SMEs is over 300 billion annually. I mean, if fintechs can meet that need, I mean, just imagine let us even make it very simple. One single entity is able to disburse a loan of 100 billion, and you are charging about 10% or maybe 15% annually. 15% on $100 billion, that's $15 billion in a year, just for closing this SME funding gap. That's huge business. Only about 20% of the players within this space have access to credit, and if we're able to push into that, it helps the economy grow. Economic velocity also increases, and because the velocity is increasing, you're able to charge more fees and make more income. of course, working capital loans and underwriting for insurance with alternative data. So these are some of the opportunities that are available on the continent. Then cross-border payments and remittances. This is another major um, business case that is yet to be fully unlocked. And that's why we are seeing a lot of players, at least from Nigeria, launching into that space. Lemfi, Moneypoint also recently, you know, moved in there. There's a huge opportunity within that place. And one of the major problems that needs to be solved is the cost of transactions between 8 to 10%. That's significantly high. It's not like you're borrowing money, you're paying lending rate as fees. That is significantly too high. And this does not even include FX conversion rate losses that you still have to deal with. Now, inbound remittances goes two ways. The first is cross continent. That is from other continents into Africa. And then there is the intra Africa remittances. So maybe from Ghana to Nigeria or Nigeria to South Africa or the likes. So if we are able to make these things seamless, the second other major problem within this space, apart from the cost, is transaction cycle. Inflows take a couple of days before the beneficiary receives it. If we can solve this problem and make settlement possible in an instant, from a 3-day, 1-week period, that's a major unlock. And because settlement can happen in an instant, it by default would encourage people to even do more of this kind of transactions. And then another thing also is leveraging technology to solve some of these problems. So for example, blockchain. Blockchain is a universal language, right? So if you can develop using blockchain a solution that facilitates remittance from whatever country to whatever country, and it's an African solution, this by default solves for that instant settlement problem because it is blockchain. Everything is happening within the same infrastructure. So this is another major unlock, and good thing is blockchain is becoming a household name, and stable coins also, right? Stable coins is really gaining adoption now, and in Africa, and one of the major reasons is it helps to solve that problem of FX volatility. Yes, I already touched briefly on blockchain and digital assets, so I'll just go a bit deeper. Stable coins, like I said, is already a big deal in Africa. And this is where to go. FX volatility, treasury management for large fintechs is a major problem. But stable coins is beginning to help. The adoption of stable coins is beginning to help to solve this kind of problem. So we are seeing even central banks also coming up with their own digital currency, like the Naira, for example. And I'm sure that I heard gist that the CBN is working on another currency, digital currency. I mean, we see how that goes, but clearly there is a need for that in the market. Then, of course, wealth management and insurtech. This is another space. Even in Nigeria, insurance penetration and wealth management solutions is not a thing. Insurance adoption in Nigeria, as an example, is less than 5%. Just is less than 5%. So that's a far cry and I'm even talking about people who even have access to financial services. So if we can come up with solutions that provide micro insurance coverage, whereby people can pay maybe a $1, $2, $5, $10 as monthly subscription, it's going to be a major unlock. Wealth management as well, which is similar to treasury bills management. I mean, it's very close to what the likes of PiggyVest, Bamboo is doing, but there's still a lot of opportunity within that space. And the good thing is the fact that we have players within that industry means that any new entrant would have, if you get your strategy right, you can leverage the learnings of these existing players, so that you don't have to make the same mistakes that they have made as well. Pension and retirement planning is also another space. Very, very interesting space. The only people playing within this space is just the pension companies, ERM pension, Stanbic IBTC pensions, and the like. Not much innovation has happened at all within this space. And this is even Nigeria I'm still talking about, let alone when you look at what is happening in other countries, within the continent. So there's a lot of massive opportunity, that needs to be unlocked within this space. And so for long-term growth strategies, these are some of the things that I usually highly recommend that you pay attention to, for sustainable growth. Number one, you need patient capital. By patient capital, that means that capital that you don't need to refund within a very, very short time, because the payback period for investment within the payment ecosystem is somewhere between 7 to 10 years. So you don't want to collect either a loan or an investor money that you have to pay back within 1 year or in 2 years. You've not even figured out the market yet. You are just beginning to see traction after maybe 1 or 2 years, and then your investor is asking for the money back, or your lender is asking for money back. So you need that kind of investment or capital source, patient capital. Also, local leadership. I mentioned that earlier. You want people who are on ground, who understand the market, who are indigenes of that society, to hold strategic positions in your company, in that country where you have just established yourself. So you want people that the industry respects, that the mass market respect, and of course someone that understands the market. You don't want to make certain, I've been in this business, I've seen all sorts of things. You don't want to make certain types of mistakes. For example, you interpret a particular clause, in regulation wrongly. That is major disaster. Major disaster for you. You don't want to find yourself in situations like that. And so that's why it's very, very critical to have local talent on board. And then of course regulatory, yes, so regulatory collaboration as well. You want to make sure that you have a very healthy and solid relationship with the regulators on ground, such that these things will happen where people will flout rules because they're not even aware. It's not a thing, right? They will flout rules, or for the purposes of, they want to come up with a new regulation. The regulator is beginning to brainstorm on it, but because of the kind of relationship you have with the regulator, they give you a hint that you are planning to do this within the next 1 year, next 2 years, and so you, as a company, can make all the necessary adjustment that you need to make, if applicable, to your business, such that when that new regulation then comes out, you are fully ready and prepared to navigate it. And then finally, and very, very importantly, is sustainable unit economics. I mentioned that earlier. Gone are the days of growth at all costs in Africa's payment ecosystem. Today, even investors and employees as well want to see that as a company we are growing, but we are also growing sustainably. It is unsustainable growth that is one of the leading causes of a startup shutdown. So because they are biting much more than they can chew, and then they begin to choke. So you want to make sure that your unit economics is solid and is sustainable over an extended period. And so these are the primary things that you need to pay attention to. Number one, make sure, as a recap, number one, make sure that your market strategy, you've done your homework well. You've identified the first foundational market and then your tier 2 market, and then you get your pricing right as you localize your product and then collaborate with partners or players that are local and key local players in the community. Thank you very much.
Wow, you just ended with a punch. Oh my goodness, that was really good. You just left, ended, and that was sharp. Thank you so
Yeah,
much. Can we give Gabriel some applause? Let's do this. This has been very insightful.
thank you.
I took away like a number of things, and some things are also like reinforcement. Uh, Personally, I would say I needed this session because like I'm working on an expansion project at my company. So you spoke to me.
Okay,
I
excellent. Excellent.
but yeah, thanks a lot, Gabriel.
Awesome.
We
Thank
have
you.
a question here actually, but I think we can also take one more question. If there's anyone that has any specific question for Gabriel, okay, we have one already. So we'll just take those two questions. So it's Q&A time. Olumide asked in the chat, it says, it's curious to know how opportunities for partnerships and acquisitions factor into market selection. Olumide, do you want to like clarify this your question so Gabriel can like answer it clearly? Is Olumide still here? Yeah.
Hi, thank you so much, Elizabeth and Gabriel. Lovely session, very, very informative.
Thank you.
So my question was, when in at least in your experience, when you're planning to move into a new market, how important do you see the opportunities for partnerships or acquisitions play in moving into those markets, apart from the other factors discussed? I know generally a lot of companies would just prefer to acquire a local player because you quote unquote skip ahead in terms of licensing, a bit of traction, if a familiar brand name that the local market is already used to. So how important would you say that is, or is it a non-factor? Thanks.
Thanks, Olumide, for that question. To be honest with you, that is actually the most important factor. That's a factor that can make or break your expansion into that country. Because guess what? Even if you choose to chase your license, right, you will still need a local player, a strategic local player to handhold you because you are leveraging on their own experience. So we did that in about 3 countries at Flutterwave to secure our license. At least that I was part of. I can't speak to how it was done for the other countries before I joined. But for some 3 markets that we eventually got those licenses, that was what we did. And it really, really helps you. Trust me, it really, really helps you. So even if you choose to, you can, of course, you can choose to buy up the company, right? But then again, if you are choosing to buy the company, make sure that the trusted hands who were running the company still continue to run the company. Because trust me, you don't know what to do. You just bought the company. Buying the company is equivalent to having your license. The fact that you have your license does not mean you're going to win the market because it's a completely different thing. So it is a very, very, very critical piece, local collaboration, because that is the fastest way to gain market insight, that will help you know how to position your product, that will help you know the mistakes you should avoid. And then usually, if you are already strong where you're coming from, usually you are going to beat that market. You are going to beat the players within that market because you are coming with a different experience and then you are riding on whomsoever it is that you are working with. Of course, you will share income, but in exchange for strategic knowledge that you are able to now combine with your own knowledge where you're coming from. That gives you leverage. The partner you're working with understands the local market. That's all they know. But you know where you're coming from, and then now you know the market. That's double win for you. I hope that answers your question.
Yeah, that was fantastic. Thanks.
Thanks.
Okay, thanks, Gabriel. Kingsley, you can ask your question.
Okay, thank you. Gabriel, that was a good one. Thank you so much. And yes, I'm also working on a project that needs expansion. So this is like, yeah, it stood out for me at this point. So I have a couple of questions that is really centered on regulation.
Sorry,
So
Kingsley, can you help us minimize those couple of questions in the interest of time, please?
all right,
Thank
I'll just try. I'll just try. So, Mr. Gabriel, right? Which is better,
Yep.
having a local players or having your license first? Especially when it comes to the subject we are talking about. That's the first one on the other side. So, I read a report, right? Despite CBN tightening their regulation on fintech, the fintech also rose over 70%. These statistics beat their previous year. So I want to know, right? How are they leveraging on the local banks licensing, or they are really using their licensing for the product they are really pursuing? And also, is it also possible for you to leverage really wholly on local banks licensing to push your product, especially when you have not really had that, big players in place, and also, those relationship with CBN to facilitate your licensing? I don't know if you really actually got my question.
Yes, yes, I did. I'll try to answer in the interest of time. I'll try to answer the three questions at once.
Okay. All right.
Which is better, chasing licensing or working with someone? Depending on the kind of capacity that you have, right? So if you are launching out for the first time, and so you are in your tier one market, so this is your first venture, it makes sense to partner with someone because you use that to gain experience. You use that, I mean, you are pretty much using another person's infrastructure to make your mistakes that they are going to pay for.
Okay.
Does that make sense? You're using the
Yes.
infrastructure to gain knowledge that you're not particularly paying for, right? So the only thing you probably would lose is maybe the visibility because you're still using someone else. And
Exactly.
of course, you are sharing income. But if you are sharing income and your transaction volume is significant, it's still better than zero. Even if your transaction volume is not significant, you are getting something that you would not have gotten because you don't have the license to operate and function by yourself. And then in the course of working with these guys, you can, of course, you bring up your own licensing application, pursuit, and they can share their own learnings, their own journeys. See, it is actually very, very important. That's the easiest way to go. Just the easiest way to go. Because guess what? Again, you have access to their customers,
Yeah.
which are likely going to be your own target market also when you get your own license. So, I mean, you develop one solution, you sell it to them. You're still in partnership, you develop another solution, and then you can renegotiate pricing on the second offering that you offer to that same market. And then after a while, if you're smart about it, I mean, it's the same environment, you build relationships with this customer so that when you secure your own license, your customer acquisition cost is significantly low because you already have access to the customer. So it's very, very smart to go that route of working with partners, pending when you get your license. And then of course, regulatory tightening, yet startups are growing. What do you expect? It is innovation that we are selling in the startup space. That's really our innovation. And so there is always a way to go around this thing, whatever the regulation says, such that you can still do your business, decently and grow well, despite what regulation is saying. So it's because by default, we are trying to look for ways to solve problems. So there will always be solutions that would work around whatever regulation is in place. So it makes sense that regardless of regulation, growth will still happen. Regardless. Yeah.
Thank you so much. Yeah.
Thanks.
Very well. Thank you.
Thanks, Gabriel, for answering those questions. They're insightful. In the interest of time, I'm sorry, Ian Olua, we won't be able to take your question right now, but we'll be having a general Q&A session at the end of this masterclass. So if Gabriel is kind enough to, wait, if not, it's also fine. But yeah, Ian Olua, you can also stay behind, and one way or the other, I will answer your question. Don't worry. But right now, we need to get to the next session. Thanks again, Gabriel, for that.
Thank you very much.
Yeah.
Thanks, everyone.
Thanks.
Yeah.
Really appreciate it. Peters and Fintech is the hub for anything fintech in Africa. I mean, we'd expand soon, but right now we're focused on building the knowledge gap for operators and builders doing fintech products in Africa, right? We have a community. So if you do not yet belong to our community, it's exclusive, but it's open. Okay, that sounds contradictory. It's open to all, meaning you can apply to join, but like there is a screening process, but it's not that deep, trust me. We just want to ensure that the right people are, coming into the space. So just apply. Betsy, please help me drop the link. So anyone interested can apply or join the community, basically. Also, we have interesting things we do, and there are a lot of things that are exclusive to community members. For example, we have a scholarship that we're currently giving away for a fintech product management course organized by Trefford, and that's only open to BIF community members. So you need to be there. We also have insightful conversations within the community. Also, we have a newsletter, right? We said that one of the things we are doing at Builders in Fintech is to bridge knowledge gaps. So we're very, very big on sharing resources, sharing insights. So our newsletter is one way that we do that. So subscribe, and you only get to get a mail monthly. So we're not going to spam you or anything. So if you're not subscribed, please subscribe. Betty will drop the link to Substack, our Substack newsletter in the channel. I keep saying channel. Today is Saturday, Elizabeth. Come back so you can subscribe. Also, some people have asked, oh, will this be recorded? Is it recorded? How will they get the recording? We have a YouTube channel. And on our YouTube channel, we post recordings of our sessions. So if you want to know when we are posting this session, go and subscribe. Just search, head over to YouTube, search Builders in Fintech. Betty, you can also drop the link and, just click directly so that you can subscribe. We already have videos uploaded there. So if you're just maybe during your weekend, you can actually binge watch some of these things. If you're interested in understanding payments, other things, right, around fintech. So do well to subscribe. Yeah, join us. Follow us on Instagram, LinkedIn, Twitter. Stay updated. We have so much more in store. Next month, we're going to close the year with a bang. And our master classes, by the way, are held monthly. We held last month, the previous month, and we're going to have another one next month as well. So follow us on our social platforms to stay updated on all of these things. Have I missed anything? I'm not sure. Yeah, lastly, yes, I missed something. Please, we know that you enjoyed this session. We've been seeing the feedback. In fact, I've gotten messages from people saying this was insightful. Tell me, tell us, but also put it online. Let the world see that we are eating good. So I dropped the link earlier. Betsy can also help me with share. So we have a tweet up. Just engage, and yeah, that'll be it. So thanks a lot. I would say thank you to everyone for joining. I mean, you took your Saturday time when you're supposed to be resting or doing something fun. You're here to learn, and that's very amazing. Thank you so much for joining. We hope to see you in our next sessions. Bye, everyone.